For myself, I'm in a very fortunate position where I've got a strong cash flow portfolio and I also have a strong income, right? So cash flow today isn't as important to me as it has been at other periods. One of the things I've done, of course, with your assistance, I won't say I did it, you definitely did it, was the idea of going, well, I had some loans that were on interest only and I moved them to principal and interest and I was able to bring down the rate. In some cases, like it was actually like, I think 0.79, the loan came down. So almost a full percent, we were able to get the rate down just by making that change. Now, of course, I have to put the principal into the loan now, so cash flow changes a little bit for me. But doing that across my portfolio, I was able to actually make the portfolio substantially more profit, which tied into the second one there you said about like asking the banks for rates, like in that rate deduction. So that combination can be really powerful in this time as well.
It's an interesting thing with regards to even just some more changes related to interest only and principal and interest. And there's a lot of commentary around those particular topics. But 2 points I'll make here is that when your interest only is coming off a fixed rate, you can go from you're jumping up quite dramatically. So 2.69 fixed rate.
Yes, it became very apparent to me. I was like, whoa, it's intense. Like, especially if you were on that 2.69 and you went to 5 and it rolled off from interest only and principal. It's not a fun day.
So we talked about 2-year fixed rate principal and interest at 269 being $2,025 a month. An interest only fixed rate at 2.69, which was being offered, is only $1,120 a month. So it's already just under $1,000 cheaper if it was principal and interest at the same interest rate. And then if we jump to 5.69, we're jumping like a couple of grand up.
I was gonna say, is that like $1,500 a month difference? More?
Well, that's so the $1,120. So 2,025 minus the 1,120. That it's 905 at the same interest rate at a $500,000 mortgage over 30 years. So when you jump onto the principal and interest, you could be jumping from $1,100 to nearly $3,000.
Wow, so that is near $2,000 a month difference.
That's right. So the people that are investors on an interest only and on a fixed rate, congratulations. It's great that you can save the money now, but be mindful of what you're going to do in the future. And also be mindful that prior to the last couple of years of low interest rates, we had the government intervention come in to look at reducing the amount of investor interest only loans that were out there by changing the criteria that you actually have to service the loan at the remaining principal and interest term. So if you have a 5-year interest only loan on a 30-year mortgage, you've got to achieve the buffers at 25 years, not 30. So they did a lot to reduce the interest only loans out there. And that's proved in the statistics. So back in 2019, there was over $400 billion worth of interest only loans. And today we're looking at around $285 billion in interest only loans. So they did the job that they wanted to do, but just be careful when you are coming off those ones. That's probably where you need to think about what's going on. And the difference between interest only and principal and interest, if it's about a 1.5% to 2% change, you're probably better off paying principal and interest anyway. And the other point is that with your investment properties, if you only wanted one investment property, paying principal and interest, after about 4 or 5 years, that property will probably maintain itself at a principal and interest repayment too, mathematically speaking. Not your investment strategy conversation, but mathematics. Usually around year 4, year 5 of a 30-year mortgage on an investment property, it should usually start to balance itself out because the debt's coming down, rents are going up, and all that nice jazz in between.
This is one of the parts where we're talking in the introduction about the art versus commodity type thing and like knowing these things. And we've had some really interesting conversations like at dinner and when we've caught up, Aaron, about just a lot of investors aren't aware that their borrowing power would be increased if they just did principal and interest loans rather than having everything on interest only, because of that, what you just mentioned there about how they do their calculations on things post their own payments. Right, so that change alone could be the difference in you actually being able to grow a bigger portfolio, even though the cash flow impact is changed there. It really comes down to, like, I'm not sure there's a right or wrong way specifically if you've got a portfolio strategy. Like I know people that have done well doing interest only. I know people who have done well doing principal or interest. But it's like you really want to understand the strategy you're following and what's right for you as the investor to hit the goals. Because my mentality has shifted. I was in that camp of like interest only everything, refinance 30-year loans all the time. And then we were at dinner and you said to me, at some point you're going to have something in the piece for, what did you call it? It was debt reduction strategy. Like at some point you're going to have to deal with this debt. You're not going to want to carry this into your 60s. And
That's
I'm
right.
like, I'm in my 30s now. And I'm like, it kind of hit me a bit. It shifted my view in like, well, how am I going to do this? And where does this strategy play? Like, am I going to grow a bigger portfolio and sell down some to deal with some of this debt? Am I expecting the properties I'm purchasing to actually pay their own debt? Where and how am I going to use business profits or income from other areas to pay down this debt? Like, how's this all coming to be?
All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.